We've just experienced the largest day of losses for this entire Bitcoin bull market. The next largest day was the FTX collapse. We've had 8.44% from open to close. And looking at the data, it's possible that this correction is not over yet. So I've got some bad news, but also a lot of good news. Hit the like button as soon as you click onto the videos. It's your home of macro cycle analysis. We've got heaps to get through today with the interest rates announcements coming up, the S&P 500 continuing to climb to new all-time high daily closes. Meanwhile, Bitcoin is starting to struggle just a little bit. Now I want to look at timeframes for how long this struggle could last. That could potentially be the bad news for those who are getting in very, very late to the party, as we've seen with the volume data coming in towards this peak. But we also want to look at how this could turn into very, very positive news for BTC. All right, guys, links in the top of the video description. Our free crypto and economic report came out yesterday. Check your inboxes for that. Plus, we have a free Ultimate Traders Accelerator coming up, which you'll get notified if you are on the email list. That's that link in the top of the video description. Thanks again for all of your comments. Some fantastic stuff here, which I'll get into in today's video. But let's start with the macro cycle. We are still here. Nothing much has changed. Looking towards later 2025 into 2026 for housing and for the economy. Now, where we sit with Bitcoin is the possibility of a little bit of a top at the moment, as I pointed out again on X just a couple of days ago. Now, whenever this sort of stuff comes up, it's a really good indicator of where we sit in the cycle. Just this particular question, if a major tops signal flashes, are you ready to take action? Stirred up a whole lot of emotion down here with comments saying you've missed out, just admit it, da-da-da-da. Meanwhile, I guess they don't understand where we were buying in the market, looking at the lows. I was the idiot at the time in 2022 and 2023 talking about buying all of these, all around the lows. I'm not going to claim that I bought the exact bottom. And I did get a nice sweet entry on the banking crisis collapse at 19,900. The bottom was 19.5. The reason I got that one is we were following the entire cycle and focused really heavily on this particular economic cycle. When you get those higher lows form on extreme panic, like the banking crisis was 12 months ago, that is a very, very, very good buying signal. But everyone calls you an idiot at the time because they think the market's going to collapse. It looks like we've got further upside to go, but we could see a significant correction from here, which I'll get to in the data for BTC. Real estate, economic cycle, things are still ticking up. And because they're ticking up, we are seeing interest rates pause longer and longer. Interesting one here for the Aussies, but it's the same thing for the US, the same thing around the world. Rates on hold. We just had our announcements yesterday. Rates on hold amid warning housing boom could delay cuts. No shit. When asset prices are going up, it's probably unlikely that they are going to cut interest rates. Remember what we discussed earlier this year, that interest rates were probably not likely going to get cut as aggressive as what the market was talking about. And that's the beauty about jumping onto X here, so you can see some of these posts. If you want to do better than 90% of the investors, you typically have to do what 90% won't do. Do the research, start to understand why things will not be what they are thinking it's going to be, why the masses think is going to happen. And in this case, it was a lot of cuts along the way for the interest rates in the US, and the same thing has happened across here in Australia. Then we can see why. Well, we've got money getting flooded into the system from governments. Obviously, we've got Biden here giving away more money for home buyers to get them into the market. Unfortunately, it's going to be at the wrong time. Now, I started making videos many, many years ago on YouTube explaining this cycle, something that I'd learned years earlier. I first started watching the cycle back in 2012, 2013, when I was buying real estate in Brisbane, when I was doing some developments back then. And I could see that there was a lot of flurry of activity then, even though we were told that the economy was not in a good state, things were collapsing, and it was just a matter of time until we would see that second dip down. Meanwhile, markets are going up, and I wanted to find out why that was the case. I stumbled across this, and I haven't looked back ever since. Your 18.6 year cycle. It's kept me with the market for that entire period. And if you want to get deeper into this, check out the link in the top of the video description for TIA Premium. We go through many courses and explanations on how this continues to play out week after week, month after month, year after year, so you can continue to follow it for your long-term investment plans. And if you want to get into short-term trading, that's also there as well. So here we are at the cycle, still a little bit more time to go, but we are approaching the end stage, which you can see from the masses, especially, I get my links here, with comments of how emotionally unstable things are starting to get. So people are saying it's too early, they've got more time, it's a collapse, yada, yada. Things are going to get even more emotionally crazy as we head into these peaks. By emotionally crazy, I mean people calling for tops, calling for bottoms, saying you're a fool for not getting in. Why did you sell so soon? This is the sort of stuff to look out for as we head into the peak. The whole point of the game for investing or trading is to make a profit. And as long as you make a profit, you're going to be around for the next time you can make a profit. There's always opportunities come up. So don't worry if you get out too early. Don't worry if you didn't manage to buy the exact bottom. Your job is to take a cut of profits out in the middle, remain with the market, hold those profits, and start to look for other opportunities. During 2022, when we were looking for bottoms to form in the market, everyone was saying why it had to collapse further because of quantitative tightening. You can see here that basically the Fed had stopped printing money sometime in 2022, and you could see the market drop down from there. Now, the main thing that we were looking at and said publicly to everyone, and we've continued to follow up and show how this has been an example, is the government will come and give out money. They will give you drop taxes, give you tax credits. Now, the banks will come out and make things a lot easier to get into the market. I said this 2 years ago, and it's exactly what has played out, because you don't need to worry about the money printing so much. It's about what else is going on. Money can be created in many different ways. In this case, they're giving you tax credits, which is essentially allowing more money to flow around in the system. And of course, banks are going to create credit too, which again is more money floating around in the system. So that's a bit of the good news looking forward for Bitcoin. And even if we do see a significant correction here, I think we still have a fair bit more time left in this cycle. So we have to see how that plays out. And I've got more data on that in just a moment. But just looking at the interest rates and what's potentially going to happen today for the US, we've got the meeting coming up. Well, now it's ticked over to 100%. You could see earlier, back a couple of months ago, it was at 95, and recently it's gone 98, 99%. Now 100%, they don't think there's going to be any sort of cut. It's going to remain the same. The following meeting in May is at 93%, so probably again it's going to pause. And you can see slowly how all of these potential cuts, so the following meeting in June was looking like a cut. The data is shifting more towards the right, which is suggesting a pause. It's at 55 now and 40. Might even get that start to shift a little more. Also seeing the September meeting shift further to the right. And we'll just have to wait and see for the rest of the data, but it continues to shift further and further to the right. Doesn't mean it can't shift back, but it's very interesting to note when everyone was looking for a cut every single month, we haven't seen that. And we've seen the opposite. It's going back to more of a pause rather than cuts. And now we've only got 1, 2, 3 cuts scheduled at the moment, or the probabilities are for 2024. I think even you'll possibly see one of these drop, and we might end up with 1 or 2 for 2024. So that leads us on to the S&P 500 and how these markets are still managing to go up with interest rates at high levels. I've got a little example here using just a fractal. It doesn't mean it has to do this exact thing, but we're just looking at how do these markets continue to do the old grind up that they've once done when they break into bull markets. So I've just taken that particular fractal off the COVID crash to the 2022 top, projected off October, and it's pretty similar to where it sits coming out of that low. Now, if the market does continue to grind up, we can just look forward to hitting the 75% level here, 5,400 points. I'm still looking towards 6,100 points for the S&P 500. And along the way, it's still looking like those sort of single digits, maybe in those low double digits, sort of your 10 to 15% corrections, while this market continues to grind up in the everything bull market with this bubble continuing to explode to the upside, taking a lot of people still by surprise. So we got the good news at hand. There is still a macro bull market at play. over to Bitcoin and cryptos. Now, the highest point here was somewhere around $700 to $800 million liquidated. We're looking at the liquidations here for Bitcoin and cryptocurrencies over the last 24 hours. Huge numbers have been flushed out of the market, especially on the long side in the last 24 hours. The last time we saw this thing happen was around the 5th when we had that big 10K bar to the downside, the opposite direction that everyone was hoping for. But you can see we're getting the flush out of the leverage traders here. So unfortunate for them, losing money, but fortunately that takes some of the heat out of the market. Now, let's take a look at Bitcoin. While this thing was pumping up, you had every man and their dog, like Cathie Wood, is here, Cathie Wood Bitcoin predictions. It was $1 million by 2030. And then as it was going up, they readjusted their targets to say it's going to come sooner, get in. I think they're just more of a marketing company than they are an investment company at this stage. The crap that they say at the certain times in the market really makes me wonder what their intentions are. And at this stage, they're just saying what they need to say at the right times in the market. And those right times are basically when the market is going up. Now, we don't hear from them. Are they going to adjust their targets? We'll wait and see. But for now, Bitcoin is down its largest day that it's had through this entire bull market. That is from the open to the close, so 8.44%. I've looked back through all of these bars, and even some of the bigger ones around the banking crisis still did not get to 8.4. It's basically 6% from the open to the close, and the largest days go all the way back to the FTX collapse. Does that mean we're over yet? I don't think so, just based on the 3-day rule that we were looking at here on the channel earlier, something that Michael's come up with. So if you want to follow his channel, I highly suggest you do that. Down here, follow Michael's channel down there, looking at some more macro and some more short-term trading. Now, where does this lead us from here and the possibility of there being more downside? How long will this take to the right-hand side of the chart? There we go. It's the opposite here. And when could we see new all-time high prices? I got some good news and I got some other good news, but I understand that if you get in late, it definitely sounds like bad news. We definitely want to see the market consolidate these huge gains from the upside that we've had since this low here in January. And then of course, the low going back to September. So we had about 6 months to the upside from the crypto SEC drama to this current peak. 185 days, almost dead on 6 months there, 6 months being about 183 days. So almost a beautiful 6-month turn. Now, we also had a consolidating period here from March through to the breakout in October. So another 6 or 7 months. We've had very significant consolidation and then a pretty significant move to the upside. So maybe we go into another significant sideways consolidation move, even if we do see some pretty severe drops, and then a bit of a sideways consolidation, which I'll go through in some fractals in just a moment. But I want to cover this particular signal here, this red, those 3 red arrows. Forget about the daily bars themselves in terms of red or green. It's the signal at the top here, the red. And if you want to get access to that, it's the TIA Gann swing indicator. You open up the settings here, scroll down and hit show bar type. So that will turn it off. There it is off, and then we just turn it back on, hit OK. We've got those signals come up again. It's looking for 3 days down with lower highs and lower lows. That's why this day can be green, because it closed higher, but it had a lower high and a lower low. If we take a look at that particular signal and we scale through the data from the chart, we've got one good news here, one little signal here that happened at the peak out of that cycle low. So that FTX low, market ran up nice and hard. We got a top in February 2nd, day after my birthday. And then we had the market fall, and it was able to recover within 13 days before putting another small top here and then having a banking crisis before it recovered again quite strongly from that point. So just looking at that again, you've got red, inside, red. So these are in a row. Don't worry about the little black dots. That's okay in this case. What you don't want to see are greens or blues. So 13 days, that could be a good thing right now. We see the market go up, hit a new all-time high 13 days from the current top. That would be great to start to scale out, I think, because if it starts to power on too soon without consolidating the move, that could lead to a very early top and the market, or at least Bitcoin and cryptos, to collapse from that particular point. Let's look at another one here. This goes up to the first monthly lower swing top. Before we get into some of the price areas to the downside, and if they've changed or if they still remain the same there. Monthly first lower swing top, we've got another signal here. 3 red days down, and that was the end. Monthly first lower swing top. Very, very critical point to be getting out. And the market basically collapsed from there. If you wanted to measure that, there's going to be a lot of months until it was able to break past that particular price point. But I would say we're in a different stage of the market. We're not in a bear market. We've been in a pretty big macro bull market like we talked about from the lows. Let's have a look at another one here. Going back to the April top of 2021. Pretty significant turn in the market. We had the top here on the 14th, a gray, so an inside, and then straight up red, red, red. You guys, the OGs here on the channel, will remember me talking very specifically about that time and then this time in the market. This was so hot. Everyone was expecting 80 grand, 100 grand from Bitcoin. I went out on a limb and said, if it doesn't break past this particular bar, 60,500, then probably going to see further downside from there before we saw more upside. That was met with huge amounts of hate, absolute plethora of hate, telling me that I was wrong about that and that we wouldn't see downside because it was just impossible. Everyone was buying and the price had to go up from there. Just looking at the charts, especially the 3 days down, especially this big bar that took out a lot of other significant lows, well, the rest is history from that point, 3 days down. Now that took 189 days to get back to the same price and then put in a new fresh high from there. So call it 6 months. So we've got another data point there. We've got 13 days and we have 6 months. So you can start to see now that there's a pretty wide gap here. And it's going to depend on which stage of the market we're in. I think we're closer to something like this than we are to something like that. We're not coming out of a low, coming out of 12 months down and only just starting to break into fresh highs. We have been going for quite some time, or Bitcoin in this case has been going. So it's unfortunate for the late buyers who are here too late and maybe listened to the wrong people, maybe didn't do any buying towards the bottom, but there were many, many signals to get in even after 25K broke, below that 30K level, to be getting into the market as it was consolidating for the move higher, that nice accumulation pattern that was forming. So we've got 13 days and we have 189 days. Let's have a look back at another couple of signals. We've got another one here in August 2020. This one took about 65 days to overcome that price point and then break higher. Here's our signal. We've got gray dot, red, gray, red, red. There was no greens or blues to interrupt the lower highs and lower lows forming. So basically from that top, come across, we got about 65 days in a consolidating period before the market took off into that top. I again remember this specific period of the market, that little dump that came in September was pretty scary for most because we thought that this whole thing was going to happen again. And the news at the time was the second variant of COVID, whatever it was going on then, basically trying to scare everyone out of the markets to say, well, it's over again. We got to go through that whole ordeal from the last 2 years, and how wrong they were. We had a consolidating period above the previous tops here, right through the middle there. Lower high started to form and the market went away. So I'm going to pay particular attention to this type of fractal here because you've got a little bit of a move down, maybe a bit of a bounce, and then a final dump. And all of that happened basically within the first half of the move, but almost within the first quarter of the move. And then it spent the next 3 quarters of the move just grinding higher, putting in higher lows and higher highs, you see through here, before it was able to break out. So 2 months, not a bad time. Could lead us all the way through to sort of May or June, obviously after halving. That's another option there as well. Now this one here was the big June pump up that it broke out, June top, and then the market got crushed from that point, 500 days. I think that has its own merit here with the COVID collapse in the middle. So I'm going to leave that one aside. Then we have an 8-day one getting closer to the peak. We've got 3 days down here. There's a gray and then 3 days. And basically the top until it broke out again was 8 days. So you got 8 days and 13, some pretty quick ones happening at 2 different areas of the market. And then basically that ran into the final top and you've got another signal at the all-time high of 2017. You got the up day that put in the final top, red, red, red. There it is. That was the signal right at the top of the market. And then, of course, we know that it didn't reach another new all-time high for about 3 years from that point. Let's keep looking. Let's keep uncovering. We've got another one right here in the cycle, 2016, 6 months across. And I think this brings up the comment that was down here from Tim. So thanks very much for putting that through. And yes, if I've taught you that, things aren't different. We're just looking at timings of cycles. So I mentioned in a couple of other videos, maybe we should look for a top in late quarter four of 2024 or quarter one of 2025. Just keep that in the back of our mind. I'm not saying that it has to happen. And as Tim's looking at here, he's still looking towards the end of 2025. It's still a possibility. We don't have any other info to tell us otherwise. We're just keeping in mind that maybe we're looking at a top later this year or early 2025. It could still be extended out to the end of 2025 as well. I think if we start to box ourselves in to say that it can't get to certain times, then that is potentially where you could go very, very wrong. You want to be flexible with those ideas and just keep an open mind as to what happens, especially with whatever data continues to come through. If we get a nice long consolidation from where we are, maybe a 6 month here, you can see we've got another 6 month come up, another 6 month reading. The previous 6 months was right here at the previous top. 6 months from where we are, that could be a fantastic time from September, where it starts to break out September, October, and then goes on for that next leg up. And if we've got a 6 month consolidation, that would really build a solid base for another longer move up that could last into late 2024 or even into 2025. It might get to that point. So we don't have the data yet, but we do have the data about the 3 red arrows here, which in the past have shown that there could be quite a considerable amount of consolidation within the chart before we're able to break out again. Now, we had those 2 occasions. You got 13 days here back in February, March of 2023, but I don't think we're in the same sort of time, the same sort of market cycle as we were back there either. We have the 8 days leading into the peak. So if you wanted to hope that we get 8 days underneath this current all-time high and a breakout, I think that could lead to some pretty serious consequences in the coming weeks, where you might see an early top and then the market crash from there, which would satisfy those who are very heavily invested in the left translated cycle theory, where basically this is the top time and we'll see a top in the next month or two and then that's it. So that could go along with their particular theory, but I'd rather keep an open mind and just look towards what has happened in the past. You got sort of 200 days, 180 days. We saw 180 days at the peak of 2021. Another 109 days where you got the signal here coming out of the consolidation period, hit that 3 days down, collapsed again, and then basically started to reaccumulate from there and break up after 110 days. So we've got quite a few different numbers here, but there's quite a few of them coming around that sort of 180 to 200 days, with the odd one being 36 and 65, so somewhere in that 1 to 2 months. Now, there's one more I wanted to have a look at, which goes all the way back to April of 2013. It's another 209 days, basically 7 months underneath that all-time high. And that's some sort of fractal that we could look for if that happened again. That would be quite nice. You would have a pretty severe drop early on in this stage of the correction, and then a much longer, drawn-out consolidating period that's squeezing out the late buyers. Then it starts to capture some more attention again as it climbs higher, and then eventually breaks out and runs into that final peak, whereby that last stage of the peak doesn't last that long above the old all-time high. So a number of things can happen from this point. The main thing I want to get from all of this is that typically, just looking at the probabilities here, when this signal comes up, there has typically been a longer consolidation. Yes, 2 times. There's been an 8-day and a 13-day. The 13-day came at an earlier stage in the cycle here, coming up from the low. The 8-day, however, came towards the end of the cycle. So I would rather not see that. I can't control it, of course, but I'd rather not see that, because that could mean we're getting very close to the top and we don't have much time left. In terms of where that happened before the top, let's have a look here. We've got signal was there those next few days. So from that top to the end, it was about 39 days. So basically just over a month, call it 5 or 6 weeks from that particular point. So if you saw that and it started to break out, Bitcoin broke out of the previous high of 74K, let's measure it from the breakout point to the top. In the past, it's been 31 days, basically dead on a month. I don't want to see that. I hope you don't want to see that either. I don't think you would see Bitcoin go to 120 or 140 grand if that was the case, just sort of breaking out in the next few days to get back to that top. So ideally, the bad news, a longer consolidation. The good news, a longer consolidation could mean higher prices for longer. So the massive 3-day down signal could spell a lot of pain for those late to the party, but I hope you can start to see how this could turn out to be really beautiful for this stage of the cycle. Layer that analysis on top of the analysis we've been doing about the monthly turning points and the monthly streaks to the upside with some sort of corrections, and you start to get a better overall picture for Bitcoin and the cycle moving forward. If you haven't already, click the links in the top of the video description for tiacrypto.com for the free crypto and economic report. Otherwise, I'll see you guys back here on the channel for another update. Thanks again for all of your support in the comment section. Like, subscribe, see you back here. Until then, take care and peace out.